Hey everybody, hope everyone's doing well and had a good day. In this video, I'll do a brief recap of the Emini 5-minute chart from Tuesday, May 6th, 2025. And we can see we have a couple of bars from yesterday. So we had a gap down going into the day and the market rejected the gap. So we had a gap down, but instead of follow through selling, we had a strong bull trend bar and a follow through bar. So to me, that tells me the market is rejecting the gap down. The bears want a gap down or a spike and then more selling, a channel. But instead, we're getting an immediate rejection. We gap down, the bulls see value, the bears see value in taking profits, so they buy and we go higher. The problem with the bull bar and follow through is a couple things. First, the follow through bar is much smaller than the breakout bar. Plus, there's a tail on the follow through bar. So instead of there being immediate follow through, like here, right on the close of this bar, traders bought. Instead, they bought a pullback, maybe a 25 or 30% pullback of this bar. So they bought a pullback, the follow through was smaller, and it's after a big gap down, or relatively big gap down. Because of that, you can see it as big down, big up, big confusion. So the first reversal up will probably be minor. The bears need a second leg down. This might simply be a bull vacuum test of resistance. So we get a bull breakout bar, weak follow through bar, and then an inside bear bar. Trading range bar, lower high, higher low. It's a triangle on a smaller time frame, and it's breakout mode. Now I said it's big down, big up, big confusion. When this is the case, traders are entering on pullbacks. So rather than buying the close up here, bulls will buy a pullback, and that creates support below the market. Rather than, we can see there really is not great momentum for the bulls. Good bar, weaker bar, and then a bear bar. The bulls are not getting momentum here. That tells me the bulls might step aside and set limit orders lower, like maybe buying below bar 1. Bears, they see the gap down, they see the bulls failing to get follow through, they might start selling, looking for their second leg down. So on this bar, we have a give up bar. Bulls buying, give up, they step aside, and bears get their second leg down. Now here, bar 5 breaking out below bar 1. The bear leg looks relatively strong, but only this bar is breaking out below the range of the prior 4 bars. So we get one breakout bar, but no follow through. So we had a failed bear breakout in this trading range, opening range, right? Up, down, reversing back up. This is a trading range open, not a trend from the open. And here, we ended up being a strong reversal and follow through. Even here, this bull bar, we tested resistance. And if we think about it, the bulls now have, let's see, trending lows on 2, 3, 4, 5 bars. And even though this is probably resistance here, there might be some profit taking from the bulls, and bears might look to sell. The problem is the approach. And let's think of it as, let me back up. Bear breakout, this bull bar, the inside bar, is a trend line break. And it's on a smaller time frame, but it's basically overlapping the prior bar by about 90%. And that's a significant trend line break of at least the prior bar. And then we sold off into the low of the next bar, testing the low close. And to me, bears who sold the close of the breakout bar, hoping for follow through, are disappointed with the bull bar, and they're using this retest when price retested this close of the bear bar to buy back shorts. And you can see the market tested that support and reversed up. So the bears may be uninterested in selling until the market is higher. And the bulls, now we have lower low, double bottom. The bulls want to break above the neckline and a measured move up. And the reversal was getting stronger. Follow through, more follow through. Weak bar, but you expect at least a bounce at that resistance. And now back to what I was saying. The bears have a hard argument looking to sell here after 4 or 5 consecutive bull bars. They need at least a second reversal. So traders, instead of selling below this bar, will probably wait to sell higher, wait for a decent second entry, and this was a bull give-up bar. Or it's a bull trend bar, a bear give-up bar. Bears are not willing to sell here. The price has to go higher to find sellers. So now we're breaking out above the neckline, getting follow through. Measured move up of the low of bar 1 to the high of bar 2 takes us close to yesterday's low. Strong bull spike, many consecutive bull bars without a pullback. High probability the first reversal is minor and we get a second leg up. Here it became a tight trading range, but we did have trending lows and trending highs, so it's a very tight bull channel. A lot of the time it was spent going sideways, but we can see what happens. After we rally, pull back at an inside bar, bulls taking profits at new highs at the channel line. And they'll buy sell-offs. We have a micro double bottom here, another rally to a new high, bulls take profits, another sell-off, another bigger double bottom, high 1, high 2, traders will buy. In this case, you can call it a head and shoulders bull flag, left shoulder, head, right shoulder. This one, we rally to a new high, but because the market has inertia and we have a bull channel line, you expect more profit taking at a new high. It's also a late leg. This might be leg 3. 1, 2, 3. So we break out to a new high, bad follow through. It's a doji outside bar, but it looks like the bar may have broken out further below the inside bar than above, which gives a bearish tendency. The bar broke further below the trading range bar than above. So the bears may be stronger in this bar, and then another bad follow through bar for the bulls. So we're at the channel line, we're at resistance, yesterday's low. If the bulls are not getting follow through, they may step aside and look to buy lower. And then we get a give up bar here, this breakout bar. Bulls stepping aside, bears becoming aggressive after several legs up in a channel. You expect channels to evolve into a trading range, and that's what we got. We tested the start of the channel, which often becomes support in the bottom of the trading range. This was a small spike in channel trend, spike, implied pullback, second leg, pullback, third leg, testing that support, and then a bull surprise. The problem with the big bull bar is that it's late in the rally. The rally wasn't all that sustainable. Strong breakout here, but it was a vacuum test of resistance, the moving average. Then we went mostly sideways through here. This might be leg 1, pullback, leg 2, second leg trap in a trading range. This is also testing yesterday's close. Big bar, but again, late in a rally, might be an exhaustion gap. So traders might actually look to sell up here, looking for gaps to close this breakout point and the breakout points down here. So when the bulls get bad follow through, the bear trend bar, bulls probably just bail out of the trade and bears become aggressive. We get a strong follow through bar for the bears. Strong reversal and follow through in leg 1 after a bull exhaustion. Also think about day structure. Is this a trend day? Probably not. We have a leg up, sideways, another leg up, now a leg down. Strong enough bear breakout for a second leg down, and we could test lower, maybe close gaps down here, because the odds are today will be a trading range day. And we got a spike in channel, bear trend. Spike, pullback, channel, another leg down, strong enough for a second leg. 1, 2, 3 pushes up. I call these pushes instead of legs because the pullbacks are implied. So we have a rally, second push, a pause, and a third push testing the trend line. You could draw the trend line from this low to somewhere in this low, and connect a parallel line to this high. You get a general resistance area. And you can see the market reversing down at the resistance, the bear trend line, after 3 pushes up. Trapped traders below this signal bar, it was a 4, maybe a 5 bar micro channel, so trapped traders below here. On this bear breakout bar, we pulled back, tested the breakout point, testing the trend line again, and then found more selling. But now it's 1, 2, and maybe 3 legs down to a swing low, testing support. Earlier in the day, we had a strong bull breakout, probably support down here. The last time we were down here, the market rallied many points, so it'll probably do the same if we test it again, as we're testing here. And now we have a spike in channel. We expect this channel to evolve into a trading range. It's more likely you get a bull breakout of a bear channel than a bear breakout below the bear channel line. So this did the higher probability event. We got the bull breakout of the bear channel, the bear trend line, strong enough breakout for a second leg, and the bulls ended up getting a small spike in channel trend, testing the top of this bear channel, just like we tested the start of this bull channel over here. We got a spike in channel down, and then another rally back to test the top of this channel. And you expect resistance in this area. And the problem for the bulls, we have resistance, trap traders from over here, and the approach, maybe 1, 2, 3, maybe 4 legs up to resistance. In the market cycle, all over again, spike in channel, bull trend, you expect the channel to evolve into a trading range and test at least the start of the channel. And so that might be down here. So when we're up here, 3 or 4 legs into a trend with lots of overlap, you don't have open gaps, and you're testing resistance from earlier in the day, it's still a lower high. You have to be ready for sellers to come back in when the bulls are exhausted. We have 3 or 4 legs up, bulls taking profits at new highs in the channel, and bears becoming aggressive again at resistance, especially when the approach is weak. Like I said, no open gaps here. Open gaps down here, but through here in this channel, we actually got a lower low here. So bears might argue this is an expanding triangle and it's a trading range. But in any case, however you look at it, this is resistance up here, and it's 3 or 4 legs up, and then we got a strong sell-off at the end of the day and a vacuum test of support. Breakout point here, got tested, but still an open gap. It's a negative gap or a body gap. So there's a gap on the line chart which plots closes of bars, and the market came back down and tested that area again. So overall today was a horizontal trading range day, and we had spiking channels up and down. They were fairly big. This bear spiking channel, fairly big and clear. This one kind of more hidden, spike and 2 or 3 pushes down in a channel. Overall interesting day, and that's about it from me. So thanks everybody for watching, and I hope everyone has a good night.